Whales can't hide their volume because volume doesn't lie. Greetings, fellow traders. There's a secret the whales have spent years trying to keep hidden from you. Something seemingly invisible, yet it's the most revealing thing if you're awake enough to see it. It's not an indicator, not a pattern, not the news. It's volume. Volume doesn't lie, and that's precisely why it can't be hidden. In this video, I'll show you how to read the language the whales fear the most. Because once you see it, you'll stop being led by the market. This isn't easy knowledge to grasp, and you certainly won't get it on the first try. But if you're patient enough to listen to the end, then listen a second, third, even a 10th time, I guarantee the way you see the market will never be the same. Especially the middle part, where I'll analyze a signal most traders ignore. But it's exactly that signal which reveals the whale's true actions. Miss it, and you'll forever be playing a game of catch-up. Save this video to your playlist, share it with friends, bookmark the timestamps. Because what you're about to hear won't just change how you trade. It will change how you survive in a market where everything can be deceptive, except for volume. If you find yourself constantly buying at the top and selling at the bottom, if you feel you're always against the trend, despite analyzing every chart, every piece of news, every last-minute candle wick, then the question isn't why you're wrong, but who is right. If you're a lost sheep in a foggy field, would you even notice the pack of wolves waiting behind you? And if wolves never howl when they hunt, what would you hear? In the financial markets, where power hides behind deceptive charts, there is one thing that cannot be concealed: trading volume. Because volume doesn't lie. A question that keeps millions of investors awake at night. Why did the price surge yesterday only to collapse today? Why does an unknown coin pump 10x then crash without mercy? Why does the market reverse the moment I cut my losses? The answers aren't in the candles, the news, or the community. They're in the silence of the volume. Volume doesn't need to shout. It doesn't need to convince you. It only needs to record. Who is buying, who is selling, and how much real money is flowing in. I once knew a man. He wasn't rich or famous, but he had a strange habit. For 10 years, every single day, he spent at least 1 hour observing the volume chart, not the price. He could watch a coin with no price movement for 3 weeks straight, just waiting for that one day when volume spiked abnormally. And when it happened, he acted without hesitation. He didn't follow emotions. He didn't ask for opinions. He traded like a machine, yet his heart was utterly calm, because he wasn't chasing the crowd. He was listening to the footsteps of the whales. One time, we were observing an obscure altcoin together. No one was talking about it on Reddit or Twitter. It moved sideways for 3 months, price unchanged. But the volume had started to change. Unusual volume spikes, small at first, then growing, then receding, then growing again. He told me they're accumulating. I asked, who are they? He pointed at the chart, those with the money, the information, and the strategy. 3 days later, that coin pumped 400%. I didn't get in fast enough. He had already taken profit at the top. The market is a grand stage. Each candlestick is an actor. But volume is the sound of the director's footsteps. It reveals when someone steps onto the stage. It warns of major shifts. It doesn't act. It doesn't fake breakouts. It is the rawest reality in this world of lies. When a breakout happens, don't look at the price to confirm if it's real or fake. Look at the volume. A breakout without supporting volume is a fake-out, beautiful to look at, but empty inside. Conversely, when the price hasn't moved much, but volume is quietly increasing, that's the sign of a real breakout approaching. Real, no fluff, no fanfare. Volume is also the psychological map of the crowd. When the market panics, volume spikes as everyone scrambles to exit. When the market is greedy, volume also spikes as everyone rushes in. but only those who see the cycle of volume truly understand its nature. Strong volume during the accumulation phase is a sign the whales are feeding. Strong volume during the distribution phase is a sign the whales are unloading, and the crowd, arriving late, buys high and sells low, and so on. You don't need to become a technical analysis expert. But if you don't know how to read volume, you'll never truly understand what's happening. Because the whales don't leave you messages. They won't tell you when they're buying or selling, but they can't hide the volume. Because volume doesn't lie. Behind every pump, every crash, every fake out in the crypto market, there's a symphony played by volume. The gentle overture when the whales start buying, volume increases steadily, raising no alarms. Then the climax, when everyone notices the price has risen and volume explodes. But now it's mostly retail money. The whales begin to sell. And finally, when the music stops, the price collapses and volume spikes once more. But this time, it's the volume of panic selling. The crowd falls into the trap, and the whales are already gone. We must be awake. We must learn to listen to the market's voice, not the community's noise. Volume is the only language that cannot be faked. When you understand it, you'll stop relying on the news. You'll stop chasing emotions. You'll start seeing the market's true structure. It's like you're looking inside a giant machine where before you only saw the exterior. You begin to recognize the difference when you stop chasing the screams of the crowd. When you stop following every FOMO-filled tweet flooding Twitter. And instead, you become silent. You observe. You look at the chart not to find opportunities, but to listen to the whisper of money flow. Because money flow never sleeps. It only transfers from the impatient to those who understand the universal laws. And one of those laws is, the whales always act first. But volume will expose them, piece by piece. The financial markets aren't for the quick-fingered. They are for those patient enough to sit through 3 weeks of inaction, waiting for that one session of explosive volume at the right moment. They are for those who understand that a green candle alone means nothing. But when that candle is accompanied by surging volume, you've just heard the starting gun. And if the volume doesn't support it, don't be fooled. Price is the shadow. Volume is the substance. And a shadow cannot reflect the truth. Massive whale buy-ins are never loud. They don't push the price up immediately. On the contrary, they accumulate gradually, making the price move sideways, boring everyone to death. But the volume will increase. A few 100,000 USD at first, then a few million. Even though the price hasn't changed, the money has started to flow in. Those who aren't paying attention will abandon the coin, thinking it has no momentum. Those who can read the volume will know a hidden wave is building. And when it breaks out, it gives no warning. It only needs a few hours to multiply by 3, by 5. That's why so many people keep losing. They see the price going up, so they jump in. But they jump in when the whales have already finished their work. When the whales have already sold. Volume at the top is usually very high, but you must know how to distinguish it. If high volume comes with long upper wicks and the price stops rising, that's not a positive sign. It's the final warning siren before the trapdoor swings open. And if you don't retreat, you will fall. Look at the top coins. There was a time when Bitcoin was stuck around 29,000, hovering just above $30,000 for weeks. Everyone said the market was boring, but the volume remained consistent. Then suddenly, one day, volume exploded, but the price still didn't move much. That was the warning of a powerful breakout. No one knew if it would go up or down. But when volume speaks, action must follow. And if you're sensitive enough, you don't need to guess. You only need to prepare. Whales aren't just skilled because they have money. They are skilled because they have time. They don't need to FOMO. They create the FOMO. They don't wait for the trend. They build the trend, and by the time you see the trend, you're already being led. But if you read volume long enough, you will recognize the moment before the trend is created, because volume confirmed it long ago. Volume also reveals divergence, one of the most underrated signals. Price makes a new high, but the volume is lower than the previous high. That is an anomaly. That's when the whales are no longer supporting the uptrend. That's when the crowd is